Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. Now, in case you're watching the show for the first time, this is where you can get top market experts to answer your stock-related queries. So, WhatsApp number is flashing on your screens. Send us your questions here. Don't forget to mention your own name, location, and your contact details when you send us these questions as well. Alternatively, you can also use the YouTube section, the comment section on our YouTube channel to send me your questions where you're watching the show live, and I can pick up some of those questions to address to our top guest today. Let's now welcome our guest on board who is going to be answering all your questions today. We have Jatin Geria, Technical Research Analyst at Mirae Asset Share Khan, to now join in and to share with us his views on the markets and to answer your queries. Jatin, good afternoon. Good to have you with us. Tell us, how is the current technical setup really looking like as far as the markets are concerned, and where are we headed?
Good afternoon, everyone. So, as far as the Nifty is concerned, we believe that after a decline of around 700 to 800 points in the last five trading sessions, the Nifty is in a some kind of a relief rally kind of a phase. We believe that after that sharp decline, this is a period wherein the Nifty just bounces from the oversold territory and regains some amount of the lost ground. However, positionally, we still believe that the trend is negative until and unless the Nifty sustains about 23,350, 23,400. We believe that the weakness is likely to persist. On the downside, we are expecting levels of 23,000 and 22,670. So, post this minor relief rally, we are expecting a next leg of selling pressure to resume on the downside. So positionally, we are on the short side as of now. The view, however, changes only about 23,500 odd levels. So view is negative currently.
View is still negative currently. Okay. Let's now understand what our questions are coming in from our viewers. We have our first question coming in for you, Jatin, from our WhatsApp number. This is Mr. S.B. Sivanandam, and he's from Chittoor in Andhra Pradesh. He says, good afternoon, Sakshi. Good afternoon to you also, Mr. Sivanandam. He says, please suggest whether Sundaram fasteners can be purchased today. Okay, Sivanandam, it would have helped us to understand what is your horizon on this one while we answer you this, as in whether our guest needs to advise you on a short term trading basis or for the long term. That would have really helped us better. But since you have not mentioned that in your question, we'll take just an overview on this one. Jatin, Sundaram Fasteners for you. How are you really looking at the stock? Currently at 1,049. Today there is an uptick of almost 2 odd percent. And when we look at the last 6 months move, the stock has actually slipped by about 24 odd percent. And 1 year also, it slipped about say 17% odd. Do you think after the recent correction has played out over the last 1 year, things are going to be better for this one?
See, in the case of Sundram Partners, what I can see is that it has corrected from 1500 to 1000 odd levels. That's a significant amount of drop. So, on the daily charts, there are signs of positive divergence developing at the lows. So, yes, in the immediate short term, I am expecting a pullback towards the level of 1150 or 1200 odd levels. So, from a 1 to 2 week kind of a perspective, yes, he can enter at current levels. The stop loss which we are suggesting is 1005, and on the upside, we can expect targets of 1150, 1200 from a 2 week perspective. So, yes, from a 2 week perspective, we can buy.
From a 2 week perspective, you can buy. Okay, Mr. Sivanandam ji, I hope this has answered your question. Next, we have Mr. Dinesh Pawar. He is from Indore and he needs a view on Coal India. Now, his purchase level was right at the peak at 502 levels. And he wants to know what should he do now on Coal India. We understand that in the first half of 2024, this was the stock that was on fire. It continued to be on an uptrend and rallied pretty sharply in a very short span of time. But after that, since September onwards, there has been a continued consolidation and correction. In the last 3 months alone, we've seen 23% of a dip here. What would you suggest?
Yeah, see, in the case of Coal India, we believe that it's a very good stock to accumulate, even from a medium-term perspective. Given the recent decline, the dividend yield is pretty attractive at current market price. So yes, Coal India is a buy at current levels. If from a trading perspective, one if is looking for accumulation, then he can keep a stop loss of 367 from a trading perspective kind of a view, and on the upside the immediate target is placed around 398 to 405. From a longer term perspective, from an accumulation perspective, yes, current levels are good levels to buy or even average Coal India.
Okay, got that. I hope this has answered your question as well, Mr. Pawar. We'll also welcome a lot of our viewers who are joining in early on our YouTube channel now. We have Ankur Modi, Kamlesh Narkere, Swati, Sindhu Ramdas, Abhishek Kumar, Shambalak Jha. We also have Hardik Patel, Ramakant, Satya, all of them joining in early. So, warm welcome to all of you. Good to have you with us on this special edition, and we'll be answering all your questions today. Let us start off with Mr. Shambalak Jha's question, and he wants to know. Okay, he's still writing his question. We'll try and take another one. This is Satya, and he wants to know for the next 1 year time frame between the auto ancillary companies Uno Minda and Sona Comstar, which one will be a better pick to really look at? Of course, that's a good question, Satya. When we actually saw the auto ancillary stocks in momentum in the early part of 2024, again, Jatin, we did see that all of these stocks have had a great run up. Uno Minda was also analyst favorite in the initial part of 2024 and it gave handsome returns. Sona Comstar also with its unique proposition continued to be a favorite of traders right there. Now, if somebody has to buy at the current levels for the next 1 year, between the two, where are charts looking more strong?
See, in between of Sonacoms and Uno Minda, the chart of Uno Minda is pretty strong because what I can see is that Uno Minda has turned range bound. However, Sonacoms has witnessed a sharp decline. So, considering the chart pattern, Uno Minda stands out or is relatively stronger among the two. So, if one wants to enter, then Uno Minda is a better play at current levels. On the upside, in terms of levels, we believe that there is immediate upside till 1200, 1250 on the upside. And if one is entering at current levels, then he could keep a stop loss of 990 on the downside.
Okay, got that. I hope this has answered your question. Let's take another one. This one is from Ramakant on our YouTube channel again. Hi, Ramakant. Welcome to Daily Calls. His question is that I have bought Tata Motors at the rate of 840 and he also got an entry into Bajaj Housing Finance at 138. Now he's feeling stuck in both these stocks because these stocks have entered into a consolidation zone and there is no clear direction in which the stock prices are moving. So he wants to know what should his ideal strategy be. Now, for sure, Jatin, there are many such investors who are feeling stuck in such companies. Now, we do know that both these companies come from renowned conglomerates, big conglomerates in India. Highest pedigree of management is involved. The vision, the industries that they belong to are also on an upward trajectory. Both Tata Motors, again, Tata Motors has had its great run up and after those investors have actually entered at a peak, they are now feeling stuck because in the last 5 months, there is nothing that has happened in Tata Motors. About Bajaj Housing Finance, fanfare listing we saw when the IPO came in. A lot of people invested in it. But after that, there has been no clear direction as to whether Bajaj Housing Finance will continue to make money for investors or not. Even the IPO allottees are feeling stuck, and those that got an entry into the secondary market also. How would you look at both these stocks? Let's start off with Tata Motors first.
Yeah, see, in the case of Tata Motors, we believe that the stock has corrected from around 1200 to 750 odd levels, 720 odd levels. But we believe that the uh, uh, daily trend or the trend from a short term perspective has reversed. So I think those who are feeling stuck after buying it at higher levels will now see a pullback towards their buying price because on the charts we can clearly observe a trend reversal from down to up. So I think their patience is about to pay off, and I believe that in the case of Tata Motors, we are expecting a pullback or a rally towards 880 to 890 six on the upside. So that is around 880 to 900 on the upside. So there is a significant upside from current levels. So I think the patience is likely to pay off, and if someone is buying or entering at current levels, then he should keep a stop loss of 737 in the case of Tata Motors. So Tata Motors has an attractive risk reward ratio at current levels for fresh entry, and in the case of Bajaj Housing, I think there is still more pain left in the case of Bajaj Housing because what I can see on the daily charts is a continuous formation of lower tops and lower bottoms. So that indicates a downtrend. The downtrend shall reverse only above 125 odd levels. So that's a significant amount of upside that it needs to cover to change its trend. So I believe that there is more downside in the case of Bajaj Housing Finance. On the downside, the level to watch out for will be 105 to 108. So there is a 8 to 9 rupee downside even from current levels.
Okay, got that. Let's take another one. Now, I wanted to also get a sense from you as far as another question is concerned. This is from Hardik Patel, and he has a lot of questions in his portfolio, as in a lot of stocks in his portfolio where he's sitting on about 20% losses. Many of those are actually PSU stocks, Jatin. Stocks like BHEL, NTPC for that instance, ONGC as well. He's facing 20% losses on these. And he wants to know, I have a 2 year horizon, but is it continuing to be better to be held on to these stocks, or should I average? What exactly should my strategy be? PSU stocks, do you remember, Jatin, were one of the favorite stocks of investors up until the elections last year. But after that, they have lost the plot. Now we are looking forward to the budget also again. Do you think these PSU stocks will come back in flavor?
Yeah, see, in the case of PSU stocks, one index that if someone is looking to buy PSU stocks, then he should track the Nifty CPSE index. So that is the index for all the PSU stocks. I believe that on the CPSE index, what we are seeing is a positive divergence developing. So that indicates that the selling pressure is in the climax phase or the selling pressure is exhausting. So considering that he is sitting on a 20% drawdown from his buying price, I believe that currently there is no point in selling off his holdings at this point of time. So we are expecting a pullback in the PSC public sector stocks, and so that is why we are not suggesting to exit. However, he should continue to hold and wait for a pullback in his holdings.
Okay, I hope this has also answered your question. Let's take a WhatsApp question. We have this question coming in from Swati. She's from Punjab. Welcome, Swati. Good to have you with us. Now, she has a question. Between two stocks, she wants to make a choice. She currently holds both these stocks in her portfolio. One is INIIT Limited. She got this stock at 225, and the other one is PTC India. This she got at 198. She wants to know, can she continue to hold both of these, or should she exit any one of them? NIIT at 225, PTC India at 198.
See, both these stocks are in a downtrend actually. In between NIIT Limited and PTC India, NIIT Limited is comparatively better because it's in a uptrend. I believe that it's likely to trade between 150 and 210, and in the case of PTC India, there is a downside risk towards 125. I think among the two, I think NIT Limited is better placed. So because it's trading in a range, and the intermediate or the trend on a weekly time frame charts is looking sideways to positive, whereas in the case of PTC, the short term trend is negative. So it's better to stay invested in NIT Limited, and I think PTC has a further downside till 125 levels.
Okay, I hope this has answered your question. Another one from our WhatsApp number is from Ramu from Hyderabad. He says, I need to know the support levels for a fresh buying opportunity in two stocks. And both these are related to EMS plays, newer technologies like Dixon Tech and Zen Technologies. Anything that you would want to suggest in terms of support levels for both these if one has to look at a fresh buy here?
In the case of Dixon Tech, the support level is placed at 15,500. That is the 20-week moving average. So one can consider to buy at that levels. And in the case of Zen Technologies, the support is placed at 1960, which is again the 20-week moving average. So both the 20-week moving average can be considered as support levels, and one can consider to buy when the stock slips to around these levels.
Okay, got that. So I hope this has answered your question in terms of a fresh entry and the support levels that you can keep in your mind as far as Dixon Tech and Zentech is concerned. Next, we will take our YouTube question from Abhishek Kumar. And Abhishek Kumar wants to know on Kalyan Jewellers, Jatin. He wants to know, can he go for a fresh buying in Kalyan Jewellers? Now, this is also one stock that in the recent run-up showed very nice uptick for investors. Is it poised for a fresh buy?
See, in the case of Kalyan Jewellers, I think the price action is pretty negative, and what I can see on the charts is that it has broken and sustaining below the 580 odd levels. So that was the 40 week average. So the price action is still negative. There are no signs of trend reversal. So I would avoid these kind of stocks wherein the news flow also is negative at this point of time. So I would avoid a fresh entry in the case of Kalyan Jewellers.
Avoid fresh entry in Kalyan Jewellers. That's the view that's coming in. We have a caller with us. Let's go across. Sushant from Nashik. Hi, Sushant. How are you?
I'm good, thanks. I have a stock.
Sushant,
The
can you hear
name of
us?
the yes,
Okay, Sushant, go on with your question if you can hear us.
yeah. So my stock name is
I guess there is some kind of issue.
E2E Networks, which is AI focused hyperscale cloud platform. The stock I bought at rupees 2,500, and I would like to know that how is the future and what should I do for the stock in the medium to long term.
And TBO Tech for long term. Any view that you would have on any of these stocks? See, Sagility again is a very recently listed stock. You won't have very long term charts here. Um, is there any view that you would want to share here?
Sorry, I didn't get the name of the stock.
So Sagility India, it recently came out with an IPO and got listed recently only. And the other one is TBO Tech. Should I share with you the kind of code name that you can look at? It's
Yeah.
TBOTEK and 1697 currently for TBO Tech. And Sagility India also, I will share with you the code name. That one
See,
is Sagility, by the name of Sagility you'll find. Yeah.
Yeah. So in the case of sagility, yes, there is some amount of weakness that is coming in from the higher levels, from the levels of around 54. I think whatever chart data is available, according to that, the crucial Fibonacci support comes in at around 45 to 43 odd levels. So I believe that there is around 7 to 8% downside in the case of Sagility India. So if someone is holding, then 43 is the stop loss level, and if someone wants to buy, then 43 is the crucial support level wherein one can enter. And what is the other stock?
TBO Tech. TBO Tech. TBOTEK.
Yeah. See, in the case of TBO Tech, what we can see on the daily charts is that has been range bound between 1500 to 1800, and the recent correction also is expected to continue toward the level of 1620 on the downside. So I believe that when the stock dips towards 1620, 1600 odd levels, that is the level to which one can consider entering. On the upside, we believe that there is a scope for the stock to bounce towards 1850 odd levels. So yes, one can consider buying a TBO Tech around 1620 to 1600 zones.
Okay, got that. I hope this has answered your question. We have the caller with us again, Sushant from Nashik. Hi, Sushant, how are you?
I'm good. Thank you so much for giving me the opportunity to ask my question. I have a
Yes,
stock
tell us your
name.
question.
Yeah, I have a stock name called E2E Networks, which is in AI focused hyperscale
Okay, we
cloud
are not able
platform.
to hear you very clearly, Sushant, but I do have your question, and that is on E2E networks. Currently, the stock is trading at 3928. And his question is that mid to long term kind of a view is what he needs on this stock. How would you look at the current charts and tell us how is the stock placed, Jatit?
Yeah, see, this stock is in an structural uptrend, very shallow corrections, as I can see on the charts. So currently, yes, the stock has been consolidating, so it's a good level to enter. On the downside, the crucial supports are placed at around 3,600. So the risk reward is favorable, and on the upside, the targets one should keep is around 5,200. So it has been in an uptrend. The recent correction that it has witnessed from around 5,000 to 4,000 odd levels is just a minor degree pullback, and once it's resuming it uptrend, then it can again go higher towards the level of 5,400. So yes, this dip should be bought into.
Okay, this dip should be bought into. That's the advice that's coming in. Another space before taking the rest of the questions, Jatin, I wanted to discuss with you is something that India has successfully done. It's tested the Bhargavastra, the first micro missile system that's designed to counter any swarm drones. And the system is developed by Economic Explosives Limited, which can quickly deploy on a mobile platform and hit targets over 2.5 kilometers. Further exhaustive trials are also planned on this year for possible introduction in the Indian Armed Forces as well. Two firings were carried out successfully at Gopalpur seaboard firing ranges this week. I wanted to understand from you with these newer systems that are getting inducted, is the defense space going to get back into focus? What is your own assessment of how important are these, new trials for us in the Indian defense system?
Yeah, see, in the case of defense pact, we believe that yes, in terms of order flows and new technologies being developed, there is a high amount of interest that is growing up in this defense companies. And yes, India has a capability, and good companies are available in the Indian stock exchanges, which can play around this defense play. I believe that the recent correction is providing an opportunity to go long in some of these defense stocks, and our preferred plays in the defense pack are the Bharat Electronics, that we believe that the uptrend is very much intact, and the recent correction has also halted around the 40-week average. So I believe that this correction that is happening in the case of defense stocks is providing an opportunity for fresh entry who have not been able to participate during the earlier legs of the up move. Yes, there can be some amount of consolidation. However, this dip is providing a good entry opportunity at current levels. So BEL is our preferred pick. In terms of levels, we believe that 320, 340 is possible over a period of next 6 to 12 months. And on the downside, the crucial support is placed at 240 odd levels. So risk reward is favorable for a fresh entry.
Also, Jatin, since this micro missile system is developed by economic explosives and this company is also part of solar industries, particularly, what would the chart for solar industries really say? Do you think there is enough and more potential for the company to bank on this new trial that has happened? Will this benefit the company greatly? Should one look at that as an entry point on solar industries with this new testing that's come into fore today again? Solar Industries is trading at 3.3% higher. Huge volumes can be seen. Do you see preferred move for this one?
Yes, so in the case of solar industries, yes, the stock has corrected from around 13,200 odd levels till 9,000. So that's a decent amount of pullback which the stock has witnessed. And on the weekly charts, what we can observe is a hammer pattern being formed currently. So there are a couple of more days left for the weekly closing. However, what we can see is a strong buying interest from the lower levels. So that indicates that there is a decent amount of buying interest around that 9,000, mark. So I think the buying interest is there at lower levels, and over a period of time, we believe that the stock has a potential to rise towards 12,000, from a 2 to 3 month kind of a perspective. So yes, risk reward is favorable for going long in the case of solar industries. One should keep a stop loss of 8,800 for their fresh entry in this stock. Structurally, the correction has happened, and this dip that we are seeing should be considered as a buying opportunity.
Okay, Jatin, thank you so much for being with us in this edition to share with us all your thoughts and ideas on this news development as well as answering all the questions of our viewers. Good to have you with us yet again.
Thank
Viewers,
you.
let's now get into the second part of our show Daily Calls, where we will now invite another guest on the show to help you with the rest of the questions that will be taken up by Kush Kodasara, market expert on the show. Kush, welcome. Thank you for joining in. First up, I have to understand from you, how are you looking at the current setup in the markets? You know, there is this a buzz around. There's a lot of talk among investors wanting to really know whether the markets are entering into a bear phase at all or no. You'll be the best one to help us understand. Are you seeing further cracks developing in the markets from where we are currently?
Definitely, I believe first target was 23,200 on the markets. We have achieved that, but yes, we have already entered the bear market. The only reason is for us technical analysts. If market is trading below 200-day average, which is a year's average, we believe it's in a bear phase. So it has been almost 17 trading sessions that Nifty has been trading below 200-day average. Around 8 sessions for Bank Nifty that we are trading below 200-day average, and now mid cap and small cap have entered that territory below 200 average. So broader market was supporting until last week, but now even those sectors have also started trading below 200 average. So definitely we have entered bear market. Now on the upside, 23,800 would be a strong resistance or can be termed as a stop loss for all the short trades. On the downside, yes, still my targets are the same. 21,000, but it would be, in a parts. So first target 22,800 is activated right now, and if you want to take a fresh shots for 22,800, strict SL for this week is 23,350.
Okay. So that's as far as the markets are concerned. Kush, we have a lot of questions coming in from our viewers. We'll first take a question from our YouTube viewer. Prahar Puriwala writes in and says, I want to know about Suslon. Can I add more Suslon shares? Hold on to my existing position? What is your view on Suslon and its outlook?
Definitely, Suzlon Energy, I believe, for long-term perspective, stock is a good investment. It could be a multi-bagger. We have, almost made a double bottom at around 54 rupees. Even same low was, taken at November month. So definitely, Suzlon is a risky buy with a stop loss of 54. First target, whatever you average it out right now, can be exited around 70 rupees, which will bring down your average cost. So definitely Suzlon is a buy. It's fixed stop loss at 54.
Okay. The next one that we have for you, Kush, is again from our YouTube viewers. This is Sindhu Ramdas. Wants to know, can I buy CAMs at the current price?
Yes, definitely. CAMs, I believe, can be, started accumulating CAMs at current levels, because I believe CAMs, CDSL, BSC, they all have a, duopoly or oligopoly market. So definitely any dip is an opportunity to buy for long-term investment. Definitely not for a short term or less than a year time frame, but if you have a time frame of more than a year, you can definitely go along at current levels. Stop loss can be anywhere around 4,100. On the upside, I believe within next 2 years we may touch 6,800.
Okay, I hope this has answered your question. We have a WhatsApp question coming in also. This is Satyan from Kerala. Writes in, I have CMS Info Systems at the rate of 575. I can hold for another year, but I'm expecting 30% returns. Will it be possible, or should I go for some other stock? Okay, CMS Info Systems. 30% return is what his expectation is over the next 1 year. Is it possible? Or will it be more difficult looking at the current conditions that you also marked out clearly? Kush.
Definitely, I believe it's difficult for CMS Infosystem, because we are making a new low every week since last 6 weeks, and definitely looks weaker on a larger time frame like monthly too. So I believe, 30% return looks difficult. I believe we may touch 400 before turning around. So 10% correction from here, and then maybe we can, calculate the, assumptions, but definitely not at current levels. Any other stock, buying at current levels for 30% upside would be difficult to give out as of now, looking at the market condition. Maybe if we stabilize for a week, and then maybe we can get in. So I would suggest, if you are looking for a shorter time frame of 1 year and 30% return, park your money currently in some liquid funds for at least 2 to 3 weeks. Then we'll get back, and we may enter a long trade.
Got it. Lavisha from Jalandhar writes in, I need a view on Power Grid and on Hippo. I have both these stocks in my portfolio. Power Grid, I bought at 335. Woodco, I have at 258. Should I hold on or sell? What would you advise? Power Grid and Woodco.
Both, I mean, if you're a long term investor, just hold on, because exiting at current levels, power grid is difficult, because we have seen almost 360, 380 levels. So stock has almost corrected 20-25%. I believe it is a good dividend paying script. Secondly, next 10 years are going to be of power sectors, because still there are many rural areas in India which are untapped, are not having 24 hours electricity. So definitely hold older on power grid. Maybe we will average it out around 280, but hold on to your existing position for long term. Woodco, I believe, on the other side, I'm not much attractive towards this as an investment also for long term. Definitely, we may see some bounce back, so you may hold on your existing position. But if we see any bounce around 230, please take a review again, and then maybe we can take a call whether to exit or shift to other stock. So hold on to power grid for long term. Woodco may exit around 230.
Okay, let's take another one again from our WhatsApp users. We have Vijay Singh Dodhia from Surat writing in. Vijay Singh जी, स्वागत है आपका डेली कॉल्स पर। आपका पहली बार सवाल हम देख रहे हैं। उम्मीद करते हैं इस शो पर आप आए हैं तो आपको सही गाइडेंस मिले और आप निवेश के कदम जो उठा रहे हैं और उठा चुके हैं इसमें आपको बढ़िया ही रिटर्न्स देखने को मिले। इनका जो सवाल है कि ये ओएनजीसी या जियो फाइनेंस में से चुनाव करना चाहते हैं। Although he wants an answer in English now, Kush, ONGC or Geo Finance, between these two, which one will be a good buy?
So, comparing both of them would be difficult because both are from different sector. But at looking at purely comparing at technical levels, currently ONGC looks much better. I believe 245 is a good stop loss. So ONGC charts are well positioned at current levels. So I would prefer ONGC at current levels. Maybe Geo Financial is still looking a bit tempted to sideways. So avoid geo financials at current levels. You may buy ONGC, and maybe we can rotate once we achieve upper levels on ONGC. So as of now, currently ONGC looks good.
Okay, Vijay Sin, I hope this has answered your question. Avnish writes in and he says, मैम जोमेटो 20% डाउन है अपने हाई से, आरवीएनएल भी काफी डाउन है और यहाँ पर मैंने पोजीशंस लिया हुआ है, अब मैं क्या कर सकता हूँ? Okay, Zomato, of course, this was a stock that went beyond 300 levels and gave investors handsome returns in 2024. But after that, it has actually entered into a consolidation now in the recent correction that has played out. Also, RVNL, again from the railway space, has been something that was on an uptrend pretty sharply and then has nearly come down by 30-40% from its all time highs. How would you really look at Zomato first? Today it's up by 4%, but hovering at 243 odd levels. What would your view be? And RVNL?
Definitely starting with Zomato as a disclosure, I'm holding Zomato and I've always been recommending this stock on each and every price. So for long-term investment, definitely you can hold on. Maybe you are a bit lost if you have entered at higher levels, but I believe stock is at exactly at 200 average, and since last 3 days, it has been bouncing back from that levels, and today we are seeing some momentum. We wish that that momentum carries towards the 330, then we may see some turnaround. So Zomato is completely hold. I believe e-commerce, and now it's the platform ticket booking platform has been launched, and it is working very successful because recently Arijit Singh tour or maybe Honey Singh tour, all event tickets are available through district app of Zomato. So I believe there is a turnaround story. So hold Zomato. 220 can be a strict stop loss for investment. Maybe 220 is triggered, we may buy around 180 again on the lower level, but you can hold it on Zomato. And second stock was
So the second stock was from the railway space, RVNL.
RVNL. Oh, yes, definitely avoid. Every each and every caller which I go through many channels. सबका ये एक ही should we buy for a
Mm-hmm.
budget rally railway
Right.
stocks, but this time it's different. Railway stocks this time are not showing any signs of a budget rally technically. Even all the stocks are below 200 average, so please don't buy railway stock as of now. Let's have some confirmed news, and then we will go long on railway stocks. So avoid RVNL.
Okay. Devanshu Prabhu says, good afternoon. I hope all of you are doing well. Thank you so much, Devanshu. Wish the same for you. He's from Mumbai and he wants to know on GPPL at the rate of 113. Okay, let's look at the current price of Gujarat Pipavav Port. 166 is the current price and his purchase level is 113. So sitting on profits. He wants to know, should I book my profits or hold on? Your view, Kush.
Definitely, if you're bought around 138, I am sure you're holding since November 23 because that was the last time we saw 138. So I believe 138 can be a trailing stop loss because market conditions are weak. Definitely, charts are looking good for Gujarat Pipavav, but markets are volatile. So maybe at a cost you can keep your stop loss because if you have hold on for 2 years, why not hold on for a bit more? So definitely, charts are not weak. So 138 can be a trailing stop loss and hold on for Gujarat Pipavav. On the upside, around 205 is a 200 average. We may test that level as a resistance. So If at all we cross 200, you can come back to our channel and then we can give a good review there.
Okay, we have two interesting questions coming in. I'm going to combine both of them because they are from the same sector. Ankush Chandak says, I have 500 shares of MobiKwik at 485. Mohammad Javed Alam, बिहार से हैं ये और ये बोल रहे हैं आई बॉट पेटीएम एट 920। तो अब मोबीक्विक और पेटीएम दोनों ही एक ही इंडस्ट्री से हैं और इसीलिए कुछ मैं दोनों सवाल आपको एक साथ ही पूछ रही हूँ। 485 पर मोबीक्विक या 920 पर पेटीएम, कहां पर आप कंटिन्यू करने की सलाह देंगे, कहां एवरेज या फिर कहां एक्सिट?
दोनों में एक ही राय है, 240 पे जोमेटो, बिकॉज आई बिलीव आई डोंट अंडरस्टैंड बिजनेस ऑफ पेटीएम मोबीक्विक since Paytm IPO. You can check all my posts or maybe blogs or wherever I've given my interviews. Paytm is a big sell because there is no business. I mean, there are thin margins, so they're just transferring money from wallet to wallet. They're just enjoying the liquid money ratio rates, interest rate. And now, FASTag, which was Paytm's a good first step, now has they have been restricted to recharge FASTag for the users. New KYC cannot be onboarded. So now Paytm is left with small business. They have already sold out ticket booking business to Zomato. So I believe Paytm is a big no, and even the MobiKwik. I don't think they are going to be a super app. They what they think, because Zomato and Swiggy are on the trail of becoming super app, and they have a good user base and loyal user base. So I think I won't invest in any new age app except Zomato and Swiggy.
Okay, got that. I hope this has answered your question. Let's take another one. This is Momita from Kolkata. She wants to know what is the outlook for Atul Auto. I'm at a loss of 33%. My buying price is 782. Should I book the loss or should I average at the current levels? Atul Auto for you, Kush.
Definitely, Atul Auto, I think in long term it's a good business, but for short term, maybe auto sector would be in pressure, and being a mid cap, and they are majorly into three wheelers, so it will take time until sales are picking up for this sector. So you may need to have a patience if you can hold it for next 1 or 2 years. I won't suggest to book loss. Maybe you can give a strict stop loss at 480. I believe if things go well, it may bounce back from current levels. So hold on with 480 for at least next 6 to 8 months.
Okay, got that. Well, we have to wind up now, but before letting you go, Kush, there is another important development that I wanted to discuss with you, and this is with respect to the defense space. Now, we do know that the first controlled flight test of guided micro missile against an electronic target has been conducted successfully today and in this week at Gopalpur Seaward firing ranges at Gopalpur at sea. Now, the indigenous micro missiles have been fired by a full authority fire control system, and this missile, upon being launched, directed itself towards the designated virtual target at a distance of 2,500 meters at a height of 400 meters above the ground and achieved the perfect target. This is being tested for probably targeting swarm of drones that could come to hit any part of our country, and this after being successfully tested even going forward in various ranges is likely to get inducted in the Indian Defense and Armed Forces as well. Now, because this micro missile system is developed by Economic Explosive and it's a part of solar industries as well, I wanted to first take a view on the overall defense sector and then on solar industries. What should investors do?
Definitely, this is a big achievement for India, because recently in Middle East we saw when there was a war-like situation, drone attacks had been, a regular strategy. So this is a good thing. We may, if it's a good success, it will help to strengthen our defense system. And looking at solar industries chart, I believe they have corrected well from 13,000, but after this news, I think they are picking up with the volumes. So if at all, we are sustaining about 9,600, I'm sure it is poised for a rally again to 13,000. So maybe I will wait for some confirmation about 9,600, above which definitely it's going long.
Okay, well, Kush, we will then thank you on that note for being with us on this special edition to share with us all your views on the markets overall, and of course, answering all the questions of our viewers as well. I do know that still a lot of questions were coming in towards the end of the show as well. Unfortunately, we won't be able to take them up today, but we can definitely take them up tomorrow, viewers. Keep sending in all your questions tomorrow at 12. We'll be back with another edition of Daily Calls to help you understand your strategies on your stocks and in this current market as well. Wrapping up at that, thank you, Kush. And with that, viewers, keep sending your questions. Stay tuned on Business Today Television. A lot more lined up for you on your screens. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition where we are going to be talking about the HCL Tech's Q3 earnings, as well as to understand how the outlook is like going forward from here. First up, to abreast all our viewers about what the key numbers have been. Remember, the profit after tax for HCL Tech has grown by 5.5% on a year-on-year